Hi everyone, welcome to the weekly video on S&P 500 technical analysis. The market has been trading in a range the past week and made a strong attempt to hit higher with a gap up. However, that attempt is a signal to the end of the recent run up. I'll explain this and more in this video, so let's jump into it. I posted this chart in last week's technical analysis video. I had a bearish view and forecast for more downside. I also mentioned as an alternative that this wedge formation could indicate further upside should the S&P 500 break above the 2860 level seen here in the 15-minute chart. And here's the updated chart of what happened. The S&P 500 made a gap up and closed right around the next resistance level at 2950. But when I analyze the hourly chart, it is still showing signs of bearishness. This recovery from the recent crash started on a strong note, but it has since lost the momentum and showing signs of weakness. The MACD clearly shows a weak move. Each higher high in the price has resulted in a lower high in the MACD. This gap up is still a concern and needs to be analyzed further. There are three types of gaps: initiation gaps, acceleration gaps, and exhaustion gaps. Initiation gaps take place at the beginning of a trend, like this one over here. As more and more investors and traders jump in, the price starts to accelerate. The acceleration gaps show up in this phase, similar to these gaps on this S&P 500 chart. Finally, the remaining investors start to jump in towards the end of a run in fear of losing out. It is at this stage where the exhaustion gaps start to appear. I'm inclined to call this an exhaustion gap of this entire run up. Taken together with the weakening MACD indicator and weakening trend, I'm still bearish for the S&P 500 in the short term. One of the rules I follow in technical analysis is to have a balanced bias. All the news and views going around us will influence us directly or indirectly, and by the time we analyze the charts, we would have already formed a biased opinion. And we suffer from confirmation bias, resulting in making bad investment calls. I made a video to explain this and have it linked in the description box below. Do check it out later. So far, our analysis has pointed to a bearish view of the S&P 500. Let's practice the balanced bias rule and look for signs of bullishness instead. Could the market head higher from here? Yes, it certainly can, but it needs to break above this overhead resistance over here. I have been tracking this resistance for the past few weeks. So far, it has rejected multiple attempts to break above it. Will S&P 500 be able to break it this time around? If the S&P does break above this resistance, then the bull run continues, and we can expect the S&P 500 to make new record highs even. Here's the Nasdaq chart. The same pattern of weakness is also apparent here, but at a lower magnitude. And the Dow Jones is the weakest among the three US markets. While the markets are showing signs of weakness and are looking bearish, there is no confirmation of a reversal yet. I would wait for confirmation and for the markets to show me the direction. I'll be publishing an update video midweek once there is clarity in the direction of the markets. Please subscribe and hit the notification bell so that you will be notified when I upload the video. And do hit the like button if you found this video useful. What are your views on the markets? Are you bullish, bearish, or neutral? Please let me know in the comment section below. And I'll see you soon in the next one.